Hey, it's Monday. I think it's the 23rd of May. Thanks for joining me. This is the first webinar I've done for a long time, actually. I've been posting some stuff on YouTube for followers there and Twitter followers and whatever else. But I thought I need to start doing a webinar once a week. And in this webinar, I also want to give away some fantastic offers. I haven't done that for a very long time. So I want to give away some free stuff and some discounts and that kind of thing. So I'm going to make it quick. I've got some good trade ideas for you. And then at the end, I'll run through some of the offers that I've got for you as well. So we'll start with the dollar index. The dollar's been on a tear recently. Actually, probably the best way to look at it is on the weekly chart, which I'll just scoot up here like this. So dollar really has been on a fantastic run since the middle of last year. You can see we have run up on the dollar index from 89, just above 89.50 up to 105. So that really is huge. We even beat the 2020 high, which was at 102.97, not 102.98. So it's been a really good run. We've now dipped back to that 102, back to the 2020 high. And the question is, what happens? Is this a small correction, and then we push higher, or is this something a bit more significant to the downside? Now you can see on the weekly chart, we had got very overbought. We're starting to turn around on the slow stochastic there to ease that situation, but we're only starting. Now you can see I've laid a load of Fibonacci levels on my weekly chart from the run, from the middle of 2021, and we have some support around 128.70, 128.60. Now if we look at the daily chart for a little bit of a clearer view on that, there it is. I drew a trend line from last week's low, and we're just breaking below that trend line now, so it's a slight concern. This indicates we could be going down further. We break below sort of 102.45. I would suggest that level has clearly been broken, and we really could drop down as far as 102.30, 102.20. So we could easily have another 100 pip drop. Now we've got the 50-day moving average coming up to meet that Fibonacci level. So I think at this time that would be a very strong support level, and I would expect that to hold. And actually, if I just flip back up, I'm using Fibonacci levels a lot here. If I flip back up to my weekly chart, you can see we've got some longer term Fibonacci levels there. We've actually got a 61.8 from way back. In fact, I'd need to show you that on a monthly chart. There we go. Let's get that monthly chart up. Okay, so that might all look a bit confusing to you, but if I just scrunch it up, you can see we've got a 61.8% fib from levels that go all the way back to 2002. Yeah, probably not that relevant at the moment, but worth paying attention to. That is a big longer term fib level. Okay. And it does coincide with shorter term levels as well, just taking that move from just before the middle of 2020. We have a 23.6% fib at 101.35. So we definitely should see some good support around the 101.5. If we're going to see some dollar weakness, then we should see some euro strength against the US dollar. I could argue that we may be forming, this is probably not actually the right time period. Let's have a look at the hourly chart. There's a mild argument for an inverse head and shoulders pattern here. This being the extended left shoulder, this being the head, a very small right shoulder, and a break above 106.00 would indicate that the pattern has completed. But even if it's not a strict inverse head and shoulders pattern, we are already seeing a short-term bullish trend on the hourly chart in the euro and something of a recovery. So we'll see if that can continue. Let's go back to the daily chart. Okay, so we're already through some fib levels. I actually need to put some more fib levels on. Let's take that high up here that we see back from the beginning of the year, right at the beginning of January. This is somewhere where we could eventually get to 108.00, 108.50, but I'm jumping the gun a wee bit there. For now, 106.70, 106.60, 106.70 certainly looks possible. Even 108.00 is a possibility on this little move higher, on this little correction up. We're in a longer term bear trend, so I don't expect that to last forever. I would say that though a break below 105.00 wipes out any real opportunity of that. That's just that little trend line on the downside. Let me redraw it just to make sure it's accurate. I put that on the hourly chart, so I really need to redraw it when I put on the daily chart. Where is that trend line? That is around 101. I'm going to call that 101.30, 101.40. So on the downside, if we drop more than 50 pips, it looks like that will ruin the chances for the bulls of gaining the control of this market in the short term. And gold is quite interesting. Gold is benefiting now from the slightly weaker dollar, and we've broken up through the 200 and the 500-day moving averages, and we're now just trying to push up through the 23.6% fib. So it looks like if we can hold above, I would say 1850, 1840, gold can push on up to 1865, 1867, 1885, 1895. Potential for a 40-point rally in gold as long as we hold above 1850, 1840 now. Okay, the real fun has been in the stock markets, and if you've been following me, you will know that since the beginning of the year I've been calling the stock markets to go lower. Indeed, they have. Every time we've had a bounce, I've been selling into resistance levels, waiting for the market to drop again. Some of these bounces have been a bit stronger than I had expected. For that's certainly true. That bounce back up through the 500-day moving average fooled me, but eventually we did turn lower. Now, we've hit a good support level, and I think that it's time for the stock markets in the US to see a fairly decent recovery, only in the short term. Could be days, probably not weeks, but for now, I think we can push up. So where have I got this big support level from? Again, it's Fibonacci levels that are giving me this. Only Fibonacci levels, actually, because we've broken some really important longer-term moving averages on the longer-term charts. But for now, we do have good support around 38.30, 38.00. Where do those levels come from? Let me show you. Let's just move this chart right up there. Okay, so just so I make sure you can see it. Actually, do you know what? I'm going to put this on the monthly chart, then we can really get some data on there. Right. Okay. So this one goes back to this chart here. There we go. Trying to line it all up. This chart goes back to the 2009 low, the global financial crisis low. That was obviously getting on for 13 years ago now. And we have dipped to the 23.6% fib, which is around 38.30. I've got some shorter term fibs, just taking the low of that COVID crash, I'm going to call it, at the beginning of 2020, when the S&P dropped to 2174. That just happens to be a fraction below the 61.8% fib, which dates back to the 2009 low. So I've taken that, which is a beautiful coincidence, because it actually hit the 100-week moving average and bounced off there. Now, of course, we didn't know that that was going to be a 61.8% fib at the time, because the market hadn't reached the all-time high. But it's just interesting how these levels line up mathematically. You often see this. How come the 100-week moving average has just lined up perfectly with what became the 61.8% fib? And of course, how come and how beautifully the price did jump off the 100-week moving average. So anyway, to me, everything looks like it's lining up. And that, therefore, gives me some confidence in this strong support level around 38.30, 38.00. There's my shorter-term fib levels all lining up as well. So we've got what people call an area of confluence there as far as the fib levels are working, and the market has bounced. Now, we're bouncing back towards some resistance from this trend line here, but I'm not going to take that too seriously. Let's go back to the daily chart for the E-mini S&P and see this candle on Friday. Not as negative as a bear would have wanted it to be, especially after that steep drop on Wednesday. We dropped as far as that big support level on the weekly chart and saw a very strong bounce off there. The market actually closed unchanged on the day, so it had a monster recovery, a recovery of about 100 points by the time the close came. Not surprising, therefore, to see some follow through to the upside today. We've got these two little peaks around 39.44, 39.50. A push up through there, which is looking more likely now, takes us to a target for today. Who knows, we could get there today, or certainly tomorrow. 4,000. That would be my target, 4,000. Then we run into a little bit of resistance around the 4,020, 4,040 area. That will be the big test on the bounce. But I do see us getting to 4,000. We start breaking up through 4,050, then the path becomes a lot clearer for the bulls. And I wouldn't actually rule that out. I wouldn't rule out a decent short squeeze before the market then turns lower. However, around the low 4100 area, we're going to start running into some resistance. 4110, 4120, and we'll probably need to review that next week if this does work as I expect it to. What's going to kill that? Well, of course, a break below sort of 30, I'm going to call that 37.50. I don't think we'll even retest that level, but if we do, yeah, I think longs would need to stop below 37.50. Give it a little bit of leeway just in case we get one of those false spikes through the support level before the market reverses. But as I say, I don't even think we're going to see a retest of that level now. I think the market can just continue higher. Okay, let's have a look at the Dow Jones because that's also tested a decent support level. The daily E-mini Dow Jones, let me just update this. Okay, there's my there's my daily chart for the Dow Jones. It bounced just above a trend line, which was sort of in the low 30,000 area, sort of 30,400, 30,300. We got to just 30,585. But again, a decent doji indicating more of a balance in the market. Further recovery today. Yeah, I think that we can get up to 32,000, below 32,000 area. 32,000, 32,200. That's my target. Currently about 700 points away now that we are already up about 200 points for the Dow Jones as I speak to you very early on Monday morning UK time. NASDAQ doesn't show the same kind of bullish or slightly more positive scenario. We didn't test any particular support level, but again, we did get a doji. We are seeing a green candle this morning. We can push up. We can get up to this trend line, which is around 12,200. 12,200, 12,300 would be a reasonable target. We could push above there as well. I think we could get as far as, well, 12,700 wouldn't be out of the question. What's this peak here? 12,600, 12,700 wouldn't be out of the question. I think that would be a good sell opportunity. I think there will be very strong resistance if we reach that far. I just don't have that same, I don't feel quite as positive about the NASDAQ as I do about the other two. The signals there are just not quite so strong. Okay, that's my little run through. I'm going to give you some opportunity to get today's report in more detail with more of the levels and trade ideas for the US markets and for the other Forex markets, which I cover. Let me just run into that now. Okay, so going to my website, which is daytradeideas.co.uk. Some of you may already have visited me at my website. If you scroll down the homepage, you'll see some of the reports that we offer. And all of these single reports, I'm not talking about the big packages. I'm not talking about the gold membership, which gives you access to all of our reports. And I'm not talking about the premium membership, which gives you access to all of our reports. But I'm talking about these single little packages which give you a selection of currencies. Also, we have the gold and silver under commodities. These are all $4.99 a month, UK pound price. Stock index futures. We've got the NASDAQ, the US markets, which I've just been talking about, and the German 40, and the FTSE is another package. So these all come in at £50 a month. Now, I'm going to offer these to you at a 30% discount for 2 months. I've never done this before. It really is a big opportunity. It really is a huge saving. Of course, it's going to save you £15 a month on a package. There's no limit to how many packages you can buy. So if you've been thinking about trying out the service and that's been a little bit too much for you, but you want to have a look at the yen, like the Aussie dollar, the New Zealand dollar, and maybe you want to go and have a look on the commodities, gold, silver, and the crude package, you can get both of those. Use my discount code, which is, I'm going to put it up somewhere on the screen here, but it's capital F 7FQ7NBX. I'll put it up on the screen for you because I know you're not going to be able to write that down quick enough. You can use that when you check out for as many of these packages as you want. And as I say, you'll get access to these every morning. They'll be updated by about 4 a.m. UK time, ready by the time you wake up in Europe. And you'll have all my signals, trade ideas, technical analysis, everything on there. And also, as a subscriber, anytime you need me, you just WhatsApp me with any questions. So it's a pretty good deal. You get access to me. I've been doing this 34 years, so I think I have a decent amount of experience, and I can certainly help you, not only with the analysis, but also with your trading. You can give me a shout with any of your questions. Now, on top of that, I need to find this again. I need to actually refresh the page. I've been writing lots of little ebooks for over the years, just getting all my experience down on paper. I've also written a course. You can see that, the complete technical analysis and day trading course. Now, at the moment, this course is on sale at £99. It's normally £400. I used to sell it for an awful lot more than that, but I've discounted it to £100. Now, I'm going to get another discount code for this, and I'm going to offer it at half the price of this discounted rate. This is going to be going for 50 quid. It's a ridiculously cheap offer. I'm basically giving it away. So I'm going to come up with a discount code for that too. I'll put it back up on the screen. And this, my 21 Rules of Survival in the Market, it's a really good article. It really is basically, if you're having trouble with your discipline, if you want to understand how the markets work, this is really going to help you. This is normally sold at £2.97. I'm going to sell it at 47p. So all these, this is going to be discounted when you click on it. I haven't discounted it yet. This will be discounted. Actually, I don't need to give you a discount code. I'm just going to reduce the price to £49 so you can access that course. And these offers will go on for the next 48 hours. So don't hang about, grab them, and I'll put the discount code up here again on the screen for any of the other packages. Now, if you don't quite understand what I'm talking about, if you've got any questions about this, go to my Contact Us page. It'll give you my WhatsApp number, my Skype number, and my email address. I'll try and put those up on the screen as well when I finish the video so that you can contact me with any questions and we can have a chat if there's any more information that you need from me. Okay, I think that's it. I'm going to get cracking on getting all the little bits and pieces on the screen for you so you've got all the info you need and get these other bits discounted for you, the course and the rules of survival, and I hope all of this helps you. Okay, let's chat again soon.